How you doing, Ryan?
Hey Dale,
Hi.
you okay?
Yeah, doing good, buddy. Interesting
Good.
morning.
Yeah, a lot of end of month action going on, it seems.
Yeah, a lot of action. How you, Brock, Sinatra, everyone. So here we go. I think that, hi, Laura. One of the features here with the dollar, remember we were talking about this yesterday, if we could break out over this level right here.
Not seeing
And
anything
then,
on your screen yet, Dale.
oh, okay, thank you, Ryan. There it is, right?
Yep, there we go.
Okay, so this major resistance here, I thought it might be a stop hunt. It may be. I mean, we have a lot of risk off happening here. If we close back under 93.5, then I think you have a false breakout, and we could get a nice break in the dollar. Right now, if I was to select one currency to go with, it might be right here, euro, or which euro made a new low here, right? And look how stiff, even with risk off, Aussie still hasn't made a new low. So, I mean, actually, the Aussie is demonstrating more relative strength than anything on the board if you want to fade the dollar. You risk the lows, it's not a tremendous risk. I mean, you could do it. I wouldn't put the stop right under, 20, where everyone has it. At the low was 22. Maybe give it some tolerance. You buy it here all the way down to 72, big round number. Yeah, possible revert. I mean, it's turnaround Tuesday. So what I'm doing is I'm looking around for, what's demonstrating relative strength that you could fade. And with the dollar making new highs for the move, one of the only currencies not doing so is Aussie. And Euro did, but it's diverging all over the place. Look, see, 2 hour, right? 4 hour, not even close to 30, kind of has a wedge look to it. So it would be Euro or Aussie to fade. Dixie seems stronger than the two of them. So, but if those two get going, especially the Euro, they start trading, Euro starts trading 20, 30 better on the day, we could be back underneath this breakout. Okay. So also the yen, you think it's overbought, and you don't get in front of this yet. I thought it was going to take a few weeks to get up here for a third drive. It looks like destiny to me now. 112.30 or so. I'll have to stretch this out. And I'd really like to see the dollar keep exploding because, guys, I'm short this bearish NASDAQ, have short positions. So it's trying to put in a higher low here. If they turn the dollar, this is really going to be the test for the market. That if they turn the dollar and the market doesn't respond to it, or not much, then the market's really in trouble, in my view. Okay, what else was I gonna? Oh yeah, so we had this line, talked about it, breaking it yesterday, and then we had, after that break, we had a bull flag that it broke down from. So NASDAQ looking pretty heavy. I don't know why they're selling it off. Could it be just because Congress can't get anything done? Maybe that's it. The Republicans blocked the debt ceiling raise, so they're trying to make the Democrats do it all on their own through reconciliation. So, maybe it's a blow off in Washington. You know what the Russell is? You're a good point, Sansi. For a while, it will. It still hasn't made a new high in 8 months, though, right? I haven't even looked at Russell in a while. I know it wasn't down when the market was getting slaughtered, but here it is. So we'll see what it does today. Still not a new high. Yeah, gold, until the yen is done and I see topping signals in the yen, I can't think about getting long the gold. Okay, Alexander, you have to wait for a yen top. So I really just, don't see a reason to want to buy it. Maybe we're getting some divergence. We're not even really diverging on short-term momentum indicators. Look at, 1 hour is all the way down here. Yeah, take a pass on it. It's diverging a little bit here on the 4 hour. So if the euro doesn't turn and the euro ends up down 50, we're going to have a massacre everywhere. So Ryan, any explanation for extreme weakness in cable after the BOE came out and said, last week they're, talking about tightening? That's a big move compared to the euro. Euro down 13, and trade selection is so important. And we've been talking about that the euro pound just exploded. So it was a tough call down here to buy it. Is there any fundamental news behind it?
No, I mean, you've obviously got US yields rising, jumping up through 150. That's obviously, a good tailwind for the dollar. The pound looks to be purely on end of month flows here because we're seeing these moves every hour on the hour. Or rather 5-6 minutes into the hour. We got the big a big move at the 12 o'clock fix, which can be quite a big one. It's 12 o'clock London. And we've seen another move now as we got into 1 o'clock. It was trading 36, 12, 14, and now it's down under 35.90. So it looks to be end of month going on here, because I see no fundamental reason why the pound's worse off than anything else. Euro's got the volatility sucked out of it, 4.56% on the 1 month at the money vols. Anything below 6, you're getting into quiet territory.
Well, what they say on Wall Street, Ryan, never sell a sleeping market.
No, exactly.
You ever hear that expression?
Yeah.
I know all. Yeah, so kind of lull. In fact, it's like that other expression that markets top with violence and bottom in silence.
Yeah.
I got a million of them, Ryan.
Yeah, don't eat yellow snow. That's another one.
All right.
It's actually, guys, morning. It's actually interesting because the Bank of England's the governor Bailey made some comments today, and he did say that every member of the Bank of England's Monetary Policy Committee is prepared to vote to raise interest rates before the end of the year, if that's necessary, to avoid persistently high inflation rates. And that, you read that, you go, man, that's hawkish. And still the pound is getting beaten up. I don't know if it's due to the situation. I mean, my brother lives in London and he tells me, look, I can't find fuel anywhere for my car. And, it's like, maybe it's just petrol now, but, supply issues are going to be, or hopefully they're not going to be a problem, but maybe the market's a little bit scared of that. I mean, I don't know why the pound is.
That makes it even more bearish, when you don't know, when there's no. I've always felt that when markets make moves and, wasn't based on news and no one could explain it, the reporters can't, tell you why, not the traders, the reporters, that it's more meaningful because, wasn't sparked by a headline. It just happened because of, intense selling or buying. So
that to me signals even more that this is possibly end of month stuff, because all the reasons are there to be long the pound. Today is value date, end of month for spot. As I say, we're seeing these moves happening every hour, pretty much into the hour, and that's a sign of end of month fixing stuff. Obviously, the big one's at 4 o'clock London time.
Yeah. Remember when at the beginning of the pandemic that the big item that people were hoarding, and people are saying that there's hoarding going on. with
Oh,
fuel
wow.
there.
Yeah,
Everyone's,
yeah. My brother, actually, I was speaking to him this morning, and he was really pissed off because he said, "Look, this guy, I can't remember who it was, who got on TV and said, oh yeah, there's going to be there might be shortages and this and that, and obviously everybody goes out trying
right.
to get some fuel. If they, if there wasn't this kind of panic, I'm sure the effects were going to be a lot less significant. So it's a shame that these things happen, but they are happening." So
And
what do
the
you do?
dollar, guys, is this a breakout? I mean, unless it fades, this, I thought we might get a stop hunt above this 93.5 and then fail, but it almost looks like it wants to accelerate here.
It's on a massive grind. I mean, you look at dollar yen on the 15-minute chart. I mean, it's in one of those times where it's
Like
not giving you
parabolic.
anything. Yeah, it's not giving you anything. It's just grinding 5, 10 pips,
Yeah.
really slowly. It doesn't give you a pullback. You don't want to chase it. It doesn't give you a pullback to get on it. I took some profit on my long-term longs that I've been sitting on for over a year now.
Well, I
just a
remember you were
tiny bit.
buying it down here last week, Ryan. You put something on around the 109 level. You were looking at it.
Yeah,
Wasn't
just a small trade. Yeah, I was
Yeah.
a couple of weeks ago I got on into 109.10, I think it was. I didn't do anything last week, but I was looking for closer to 109.
Yeah.
But I've been long from say over a year, and I missed the last one move up into 111, so I took a little bit off on this one. But again, I can't help think it's end of month as well. Yeah, there's a big tailwind with yields. So part of me says, this could go up to 112, maybe 112.50. I'd love to see that. But part of me also says I want to get over the end of month, end of quarter hump, because it's also half Japanese fiscal year as well.
Okay, so we have a lot of unusual flows until the next few days.
Yeah, get me to Monday and then see where we are, see where yields are, and then I'll start to believe whether this move is real or not.
Okay, what do you guys think about, is Blake here today or did he leave already to go?
He's going to be here in a little while, he said 15 minutes in, so.
Oh, okay. All right, so what do you guys think about the action in, say, S&Ps? We rallied more than 61.8 and have pulled back to the old 38, and look how much weaker NASDAQ is. NASDAQ looks more in a position to challenge last week's lows in S&Ps, and I think it's because of yields. The mega cap techs don't like higher yields.
Yeah, that's true. I think the same applies with equities. What Ryan just said about month end. I want the next couple of days to go, and then I'm gonna, we want to see whether these moves, or the breakout in the dollar, or the yen, or equities, if it's a real thing. Yeah, exactly. It's these kind of days, I don't trust them that much, but still we're seeing a reversal today in risk, and naturally metals are getting creamed again, as they always are. I mean, we've talked about them before, and I'm very bullish, but as I've said for days and weeks now, I'm holding off because they're trading very heavy, and I don't like getting long. I don't like getting what do they say about bottom pickers? They get smelly fingers, right?
I remember a few weeks ago, Stel, you were saying you're looking for a stop hunt under 1680, and then it was going to turn. So I mean, the narrative that you talked about a week or so ago is possibly unfolding.
It's manifesting slowly. Yeah, maybe.
Yeah. Anyway, see how I remember everything you say?
Of course you do. And if you look at silver on the daily chart, we're like on a. Are you looking at that? There's if you zoom out a little bit more, this is kind of like a channel. It's we're getting close to these lows now. So if this breaks,
why don't you take the screen and show what you're looking at?
Hold on a second. Let me move out of the dark color theme because I know people don't like it. Let me take the screen. Yes, that's the one. Share.
Okay.
So this is roughly what I'm looking at, and this is a zone that's been holding for a while, for months, And
Yeah,
I think that with gold that hitting 1680 or a flush below, we're definitely going to get below this in silver. So this flushes out pretty much everybody, and then I think we go higher. I mean, I would love to see 19s. Oh, that would be a miracle in my opinion. But I'm still waiting.
It could happen.
It could happen, of course. It could happen.
Yeah.
And yeah, so today it seems to be like a turnaround day, but as I said before, we're getting to month end, and I don't completely trust these moves. The yields are going to be driving pretty much everything, and I think really 175 is these highs over here. The previous highs, 175, I think is really the level after which I'm going to start paying attention. Until then, I'm not worried or not bothered, because you know me, I'm not a day trader. So I like to see when things actually materially change. And when that happens, I start slowly piling in. So
I've seen a lot of analysis talking about 210 by year end.
Yeah, well, if we break even the psychological 2% level, I think that's going to be that's going to be a trigger for a pretty big move in risk, my view. But
hey guys,
hey Blake.
Hey, I was running a little bit late. I don't know if anybody else is here with you guys.
Yeah, Ryan's here.
Oh, cool.
Just us.
Yeah, I'm here.
Just a quick one. Just a quick one before Blake kicks off. One level I'm keeping a close eye on now. We're below 136 in K was 135. That was a big, huge area on the way up, a year or so ago. And if we get down there, that's where I'm potentially going to look to start piling into longs in maybe in some decent size, because it is a big, big level. It's a big,
we're at the
Brexit level.
We're at a pretty decent level here, right? I mean, these lows, they break.
Yeah.
There's just a gap below.
Yeah, and you can actually see it in the you look at the euro sterling, and it's getting close to that 86 pence level, and I think it's been setting up a nice bullish wedge, which looks like a possible breakout. So I want to show you guys just a couple of things really quick.
You can take over if you want.
Yeah, I'll grab the screen. Give me 1 second.
No turkeys for Christmas.
What's that?
There's a shortage of turkeys.
In
not
UK.
in the not on Twitter. But you mean for dinner? You mean?
I'm sorry, I'm not following you. I must have missed everything this morning. I'm sorry.
No, it's just a comment that one of the attendees said that some Norfolk turkey terms, they can't get workers.
No kidding.
Yeah.
Oh, well, what wasn't Ryan? Weren't you talking about that?
Yeah, a couple of weeks ago. We got no turkeys for Christmas, no gas to cook it on, no petrol to drive the car to the shops to buy it. Yeah, we're all going to be sitting around a campfire. I mean,
honestly, Brexit is a big deal. I mean, people, we can joke about it, but you guys are struggling and having some issues in the UK.
Yeah, this isn't Brexit. This is just it's sort of Brexit.
I know. Don't you think it's like the knock-on effects of Brexit? I mean, it's not like it's. Go ahead.
But it's the. Let's take the. You're going to start me off now, and I'll go on a rant. Let's take the driver.
Sorry, I didn't mean to do that.
Let's take the driver shortage, which is the reason why we've got all these problems with petrol. There's no petrol shortage, no fuel shortage, just a shortage of drivers. To deliver the fuel. Now, this came about because of a private conversation BP exec had with someone regarding 2 petrol stations that may have had to shut down for a couple of days because of a lack of drivers. That got leaked to the press, and here we are now with 90% of UK garages out of fuel. Anyway, the reason there's a driver shortage is twofold. One, it's to do with Brexit. Yeah, very much so. The other side is there is a lack of drivers across Europe. Poland, Germany are in a much worse position than the UK as far as drivers are going. Everyone's blaming the government.
We have a shortage of drivers here too.
You have a shortage in the US, but what no one's blaming is the transport and haulage firms who had just as much time to prepare for Brexit as everyone else. And what did they do? Nothing.
But where did all the drivers go that were driving before COVID? Did they all retire?
like all the other migrant workers, they went back home.
Okay, there are migrants driving trucks.
Yeah, loads. But but this is happening in Poland. They're lacking drivers. And then everyone's blaming the government, but no one's blaming the fact that haulage and transport firms pay low wages to drivers. It's a crap job to do socially and work wise, and they're not really well looked after drivers, and they're paying the price for it. But apparently, it's all the government's fault and Brexit's fault. So I'm calling cobblers.
Interesting. All right. Well, thanks, Ryan. Well, I'm not saying that's the reason for the sterling weakness, but I do think structurally, you guys, most of you know this here that listen here daily. That false breakdown here in August has me very bullish the euro sterling. Now that doesn't mean we're going to like 90. I just think we're going to be challenging like the upper end of this. Well, I think it's just a slight descending channel, but you can see really the key resistance here is we set up this, like, I think a lot of people are trying to trade it as a double top, but it's not. It's just building stops above that resistance, and you break out above 86, and you should probably trade pretty quickly up to 86.30, 86.60, somewhere around there. And I think we're going to find some significant resistance on our way up there. But that's something that I've been keeping an eye on. Everybody that's in the ForexAnalytix room knows that I'm long, but that's just something that I'm paying obviously very close attention to as a result. The Aussie dollar was our chart of the day yesterday, and we had a long discussion about this. And I want to turn our attention to the Aussie, just so everybody has a very clear idea of what I've been thinking here, because I did put it in the week ahead video on Sunday, or over the weekend rather. And then I blogged about it yesterday, and you can see that this bear flag pattern that you see here, we're held up by the 38% retracement, which a shallow bounce already suggests that downside's coming. If we can't get above 73 20, excuse me. And you can see here in the ForexAnalytix chat room, I mean, yesterday I closed the Aussie dollar, this morning for 35 pips. I reopened a short for a third of it at 72.57, because I'm really going to be adding, that's more of my tracker right now, being short in the 50s, because now I can have a smaller position, kind of track it. It gets below 72.20. I want to be aggressively short. And the reason why is because I still think we have unfinished business down here at 70.50. And the reason why it's such unfinished business is I have to take you out to a weekly chart and show you this. If you take what I think is a generational low in the Aussie dollar, meaning that probably you can take it from now to probably the rest of my life.
You're going to live past 70.
I don't know. Well, I don't know. I lived a pretty hard life when I was younger. But that's neither here nor there.
I'll be 90. I want to see you at 70.
All right. Sounds good. I can't wait for us to be old men on a park bench slobbering on each other. That'd be great.
Looking forward to it, brother.
I like trying to switch out my gums or something. Anyway, I'm joking, guys. I'm totally joking. Although I might have to change out Dale's gums at 90, but you never know.
Maybe my diaper.
No. You know what? You guys know my mother, my mother-in-law's mother, she's the mother of holistic medicine, Dr. Gladys McGarry. She lives just down the street from us. We spent all the holidays with her. Anyway, she is 100 and she gets around just fine. So I'll tell you what, if you ever want any, go Google search the mother of holistic medicine. And if you ever want some motivation to see how long you could possibly live for and be healthy, that's her. She's 100 and she gets around just perfectly fine. They took her driver's license away from her this year, though.
Oh, okay.
So anyway, I mean, that sucks. Right. But
that's amazing.
Yeah, she was getting a little dangerous behind the wheel, but she's, anyway, but I'm just talking, this is what we call a generational low. because I don't think that we're going to see those levels anytime in the near future. Now, a 38% retracement of this move comes in at 70.50. I've been expecting that level to be tested. Okay. I'm been looking for that level to be tested. 3 weeks ago, when we made it to 71 cents and we bottomed and we rallied like 300 pips, I was like, damn it, did I miss it? I thought I might have missed it. And, you know, we bounced like a bat out of hell, squeezed everybody out that was short. You can see above that resistance here, got everybody out. Then we turned lower again. And because I think stocks are moving lower and, you know, I think risk aversion is going to, you know, pick up a little bit here, and the Aussie dollar is going to be sold as a result. So I think we can actually test a new low. I am looking to be a buyer down here at 70.50. I am looking for a long down at those levels. I just think we're going to get down there. And that's something that has been on my radar really for the last several weeks. And I've been targeting it to the short side now. And I am short smaller. I was pretty aggressive last night when I was short near 73 cents. I'm less aggressive at these levels, but I'm still want to be short because I am targeting it lower. And I think that that is worth noting. You can see some of these other currencies like the Kiwi is breaking down. We were unable to break this 50% retracement, a lot of horizontal support here. And this is really a product of, you know, of what I think is risk aversion. And the S&P, you know, yeah, we're bouncing right here. And if you are a ForexAnalytix subscriber, oops, sorry, I'm at the wrong place. ForexAnalytix subscriber, you get our bias chart. We actually are going to make that in 45 minutes. We make it every day with it's private for the ForexAnalytix subscribers. But you can see we're talking about 44.20 as being really key support in the S&P. It's this dotted line. But what you see here is we broke this ascending trend line, and now we're testing that this is not relevant at the moment. Oh, did I just?
Yeah, NAS is even weaker, bro.
Yeah. I know Nasdaq's weaker. The Dow continues to, you know, look a little bit better because yields, but I really want to pay attention to this, you know, the lows today, because this is, like I said, this is like a support level. It's support levels are zones. They're not necessarily, you know, levels that it's right at the level and you expect a reaction, but it is a zone. And my opinion is if we start breaking through those lows, we're going to, you know, then create the cycle of lower highs and lower lows, right? And that is a change in trend. And that's a distinct change in trend that we need to pay attention to. That doesn't mean we're going to go to, you know, 4,000 tomorrow, but I think that really suggests that we are, you know, it's a two-way market now. You can play both sides of the market. You don't have to.
Gartley was beautiful, Blake, that you called last week. It rallied up 150 handles from when you first showed it, and then it peaked right around where the Gartley was going to be.
Yeah, it looked just like that. Thank you very much. And you know, on the week ahead video, I referenced that chart, and I'm not sure if it's still in the analysis from last week. We removed most of the analysis, but the very end of the week stuff. So, oh yeah, you can see here. There's the Gartley right there.
Yeah,
that was from like Thursday. But I talked about it over on the week ahead video about, you know, 40.85 being resistance. That was the exact high to the pip yesterday. So really key resistance on the underside of that trend line on the S&P. I think that the market is, like I said, as long as we stay below these levels, you got to expect two-way price action. So, you know, markets dip, you can probably be a buyer and look for a bounce, and, you know, they rally, you can sell into strength and trade it in both directions. It's nice to have a two-way market, in my opinion. That's what creates volatility. And for us, that's what we're really looking for. So we don't have a guest today, do we?
We do, a special one.
Who?
Andre Cardoso.
What?
Okay. A special one. Thank
you very much. You guys,
Hello,
you know,
everyone.
You guys are in for a really big treat today, because you guys are going to get, speaking of harmonics, you're going to get a really good look at harmonic patterns. And Andre is our harmonics He's our in-house expert that gives you all these beautiful charts. So, Andre, good to have you here.
Was a segue.
But before I go, let me just mention we have our our seasonal price special offer that we do at every September. Because it's after the summer, fresh new season offer. We offer a discounted amount for ForexAnalytix. Basically, buy 1 month, get 1 month free. Get 2 months free for the price of. You get 6 months for the price of 4, 12 months for the price of 7. So very substantial discounts on our packages. We will only offer this for the next week and a half. So make sure you take advantage of it, because when it's gone, it's gone. And make sure you visit our ForexAnalytix webinar sponsors, Pepperstone Securities, more importantly, Forest Park FX, because they can take on U.S. Traders, North American traders. So if you're in U.S., Canada, and you're not getting ForexAnalytix for free or cashback rebates, make sure you reach out to them on Skype, or there's an email right here. We've been working with them for like a few years. I had a new trader that remembers me from like the last 15 years. That used to be a client of ours. He jumped in the chat room, and he's like, I opened an account with this brokerage firm. I forget what. Hold on, I'll tell you. It was the brokerage firm was SGP Limited, and I'm like, hey man, who's that? And he's like, I don't know, but I think it's a scam. I think, and I'm like, I would not do business with any brokerage firm the Forest Park is not doing business with, because they've done all the research. There's a lot of, very shady FX brokers globally. You gotta work with people that are, regulated in their regions. And that's why you work with people like Forest Park FX that have done all the research. They're looking out for your best interest, because, they want to make sure that you're going to be around. So, make sure you talk with them, okay, first, before opening any type of brokerage accounts anywhere. All right, guys, I'm going to pass it over to Andre, Dale, Ryan, Stelios. Thank you, guys.
Thanks, everybody.
Good luck today, Blake, and also have a safe trip out there to Cali.
Thank you. Oh yeah, I will not be here the next few days. I'm flying to California and driving a moving van, moving my mom home.
You're
after
a good
20
son.
Some odd years. So yeah,
good son.
Gonna be nice.
Yeah,
thanks.
Nice, man. I wish I had my mom near me. All right, so anyway, Andre, you want to take the screen?
Yes, sure. Let me.
How have you been, my friend?
I'm been well, thank you. Working
Good.
as always. It makes us wealthy.
So Andre, before we get going with some analysis,
Of course.
I've talked to you a few times before. In fact, I think that's how you ended up here. Is what attracted you to Harmonics? Did you go through other methodologies before you landed and kind of found this was or did you start with Harmonics?
Not all of them. I missed some, but I started to develop a process with the harmonic patterns. What I call a process is a process to trade based on the decent risk reward approach. Initially, this is a process that starts 2011, probably 2011, 2012, when I went unemployed. So I was working for a network security and network provider company, so as a supervisor. So then all the team got unemployed, and I joined TradingView. And as soon as I joined TradingView, I started to see a lot of people sharing those harmonic patterns, and I started to wonder what is that methodology about. So, and I started to develop that process there. Basically because I think it's common for everyone. So we start to push some trades without the proper knowledge. and that happens to me. Also, I started to push some trades. Luckily for me, the trades went well for me. One day, I wake up, I shorted coffee with a few bucks. I made a quite decent amount of money. And then yeah, and exactly, and from that day I started to develop a process to learn, and because we have alerts everywhere to calling your attention for the most common mistakes the traders used to commit when they approach the market. So I initially I tried to avoid those common mistakes, trying to learn the most possible in order to avoid those same mistakes. But when you start to put your money at risk, things will start to change. And then I started to realize that it's the same process for everyone. We think we know how to trade the markets. We think we have a decent strategy to trade, and things are not going in the direction that you expect. And that is a level where I think the most common traders will quit from this journey. So we will be confronted with a situation. Okay, if I keep doing this, I need to learn, or I will keep doing it wrong. I need to learn how to do it correctly. So if you are a persistent person, I believe you will be confronted in that situation, and you will try to learn even more. So at some point, I on TradingView, I gain a lot of projection inside that platform.
So are you self-taught harmonic patterns just off TradingView? Or did you read any books? Or
no, I didn't read any books. I learned the ratios where those patterns tends to form, and then I develop a process by my own. Okay. To trade them. So we have a lot of references to trade harmonic patterns. Obviously, Scott Carney eventually is the one that most of the people.
Yeah, but he says he invented all of them.
Well, it's probably he was the one that makes the effort to learn those processes.
Okay.
But the patterns were there already. Actually, the Gartley pattern. There's a reason for a Gartley pattern. The Gartley pattern, which was not invented by Scott Carney. It was actually found by H.M. Gartley in 1935. So those patterns always been here. So if you go back in history before Scott Carney existence,
pre-Carney,
those patterns are there, and as
BC, before Carney.
Exactly before Carney. But no, those ratios, those patterns tends to respect. Those ratios are presented not only inside the financial markets, as you know. I trade based on, or actually those patterns tends to form based on and supported by those Fibonacci ratios. So and we can see those ratios, the importance of those ratios in other elements in our universe, not only on Earth, but also on space, between planets, between the orbits, between planets. So we can find those ratios everywhere. So it's not uncommon to identify those patterns. The difficulty, in my point of view, or the hard thing to do, is to learn how to take advantage, or how to create, let's say, to create a strategy to support your trades based on the decent risk-reward approach. And if you repeat that process, I believe it's similar to any other methodology we learn to trade. If you trade Elliott, if you trade Harmonics, if you trade basic technical approach, if you trade anything you trade, you need a strategy to fight that the possibility.
You need money management skills.
Money management, exactly. So I found the harmonics very useful in order to identify, as I said before multiple times here, in order to identify my targets, my limits, and adjust my position size accordingly to the amount of money or the percentage of money that I'm available to lose in that specific trade. And of course, I lose a lot of trades based on that. But when the trades comes on my direction, usually I recover a lot of the previous losses, because the risk reward ratio that I use, usually, if well managed, it allows me to expand and to expand my rewards. But let me say I think the main objective to trade those patterns is exactly the risk reward they offer. And if we pay attention to those specific Fibonacci ratios, and if you study those processes, at some point it will become familiar. It will not be so, let's say, I will not create any doubt if the pattern is there or not. So the pattern is there. What I want to do? Do I want to engage this pattern at this point? Do I need to wait? I need to search for another opportunity. And that is the most hard choice to do. Which pair should I trade at this point? Which pattern should I trigger? And that's the hard part.
I see this 4-hour chart that you have up on the S&P. Oh, it's a 1 hour.
This is a 1 hour. Yeah.
So if you want to go over it, that's fine. I think we're at a juncture where it might be good to look at some longer term daily stuff, with what's happening in the dollar, what's happening in metals, and what's happening in risk.
Yeah, I just pushed this chart for SPX 500 because, as mentioned by Blake, we had these bearish. I call it the bat pattern because the market failed to retrace here to the golden Fibonacci retracement level. So based on the Fibonacci ratios here, I call it this bearish bat pattern at 88.6. The price has one first initial reaction and then a new higher high. New higher high, we have a clear divergence there, which has forced the price to land. Now, what I'm seeing at this point, and this is of course just one of the probabilities, is for the price to find some support or some pressure at this price zone. Note that we are already trading this previous next zone. This is a next zone for 4 hours, double bottom printed below. This is a technical double bottom that I shared before with our subscribers. So we are now threatening that next zone. So I will not be surprised to see the price bouncing from this price zone. But we have also a few points below the bullish shark pattern based on these false breakouts above. So we have this false breakout above the previous structure highs, and the market started to sink. So at this point, at 43.86, this is the golden Fibonacci of the last swing high. So I always like to pay attention to this Fibonacci level. Usually the price finds some pressure that I will not say the price will bounce and create new higher highs. I don't know if that will happen, but if that starts to happen, if we start to see the price trying to recover from this price zone, well, I will try to look at this into a higher degree, inverted edge and shoulders. And if that happens, we may see new higher highs very, very fast as soon the price starts to recover above these fractal resistance. But until there, I need to wait for the market to approach, of course, the resistance. So we need to confirm this initially as a shark pattern. If the price decides to bounce from this price level, it may form one inverted edge and shoulders, but it will take some time to develop.
Okay, so Andre, if we get down to that level that you see, see as a possible, support level, buy zone, do you have a trigger down there? Do you need a reversal candle, or do you just buy it when it's at that price?
No, usually I wait for a pin bar for a reaction, first reaction. Sometimes I miss that first reaction. The markets may offer me a second opportunity with a type 2 formation. We don't have time to explain that, but basically it's a retest of the completion point of the pattern. So if the price decides to bounce, and then if the price decides to approach again the completion point, kind of a double bottom or a retest of the lows again, that may offer me a type 2 formation of the shark pattern, and I can try to take advantage of that. But again, I need to wait for for that to happen. Nothing is granted, of course. This is just a game in between commas of probabilities. Let's see if the price decides to react from.
I'd be
from
curious to see what you have on the S&P or NASDAQ on a daily or weekly.
S&P, we have, Dale, but what can I say here? You know, what can we say after all this sequence? I don't know. I don't know either, because
I mean,
every time we see, yes, sorry,
okay.
Every time we see the price approaching the previous structure support levels, the market will start to bounce. I don't know what to do at this on those higher levels or those higher time frames for SPX 500. I can only tell you wait for the best option to buy and wait. You know, based on this, I can't suggest anything else. I will not suggest you to short and wait for the price to retest the 200 moving average. That can happen, but I don't have a decent risk reward approach at this point
because every break is held. Is that why?
Most of the time that's what's happening, and I don't believe it's the best option to try to short it. I prefer to go into a lower time frame and try to go long with
swing trade it.
Preference for SPX.
Scalp.
Yeah.
Okay.
Same for the DAX as an example. Bearish but pattern for the DAX also on a lower time frame. We can go into 1 hour time frame, very similar to SPX 500. Note that the DAX is already approaching the golden Fibonacci and the 50% Fibonacci retracement level. So this is a natural pressure element or a pressure zone for the DAX, and the same will happen if the price decides to start to recover from this price zone, the head, eventually the right shoulder, and as soon the price breaks above the resistance, that should trigger the inverted edge and shoulder. Very similar to the previous process where the price prints a V-shaped recover multiple times, actually very similar to the price action on SPX 500. Now, we also know that, and we need to pay attention to that price structure that Blake calls the attention to. So basically, this is kind of a price behavior for a reversal because the price starts to form new lower lows and new lower highs. So if the price decides to keep printing that type of structure, probably we will have SPX 500 trading even lower these levels. But based, I always like to search for a specific pattern to trade. So that's the reason why I'm calling your attention for the potential shark pattern and the eventual.
How about when you and Blake were both long US dollar MEX last week now, for different technical reasons? I mean, I don't think he did it off a harmonic pattern. Are you still in the pattern in play?
No, because the market with the last week event when the market
was a winning trade. Yeah,
it was a winning trade, of course. If well managed, it was a break-even trade with the second portion of our initial position size, if I get the point. So I entered the market. As soon the market touches my first target level, let me put my Fibonacci tool right there. As soon the market touches the 38% Fibonacci level right there, we should adjust our stops. So that's always my suggestion with people trading with me. Adjust your stops to break even and start to partitioning your position, because we don't know if the market will go in your direction or not. What happens next is the market fills the 50% Fibonacci retracement, but fails to touch my second target at the golden fib. So if we are not fast enough to try to close our position, the next option is a break-even trade, because the market will approach your entry. Again, it probably during this process you will exit your trade. So answering your question, I'm not positioned anymore in this sequence, but this was the bullish, another bullish pattern projected at 1990, a huge sideways moving process, and then finally a violation of the structure forcing and triggering this sequence.
Nice.
It was a nice pattern indeed.
Yeah.
We have a few others. The Australian dollar. Australian dollar on a daily versus the New Zealand.
Okay.
We have this golden Fibonacci extension level also as a nice support, nice bounce from these levels. Weekly and daily fractals now adjusted to the most recent lows, 102.79. So we have targets positioned at 105.40. So, and I will not be surprised to see a few points higher to the golden Fibonacci extension. But I have targets for this sequence at 105.40, which is a 38% Fibonacci retracement of all the patterns. So I wait for that to happen for the Australian dollar. Another, you were talking about the gold, Dixie, and actually the metals in general. If we go into a weekly time frame, actually I shared this chart today with our subscribers at ForexAnalytix, and I shared before. Actually, let me try to share this also with our viewers, and let me try to show you this chart here. So this was a chart that I shared before. This is a chart from July 05, when the Dixie starts to approach this kind of, in my opinion, kind of a next zone for a technical double bottom printed below. So a technical double bottom, usually I like to plot or to monitoring the close price of the structure. So I like to pay attention to the close price of the retest. Let's call it the second bottom. So if the price decides to close above the lower close of the first bottom, I will consider this as a potential technical double bottom, and specifically with that fast reaction from the support. So I will admit that a violation above this resistance should trigger the technical double bottom. So we are now threatening the violation of not only the most recent fractal resistance printed last week, but we are also threatening that next zone. Actually, the market spent last week threatening that next zone. So we are now in a position that I can say I will not be admired to see 96.16, which is the default projection for that technical double bottom being reached. So that will put the price basically at 50% Fibonacci retracement from the previous structure highs. So that being said, and as I said before, and at the same time we have, if you want to see this for euro versus dollar, which is already trading very, very heavy below the monthly fractal supports. So this is also a technical double top that I shared before. I don't even know when I shared this one, but this one is older. From July, also from the same period, from the same time. Once the euro versus dollar starts to print this technical double bottom, I called our attention to the bottom of the structure, because as soon the price breaks these lows, which I believe the market is actually now trying to do that. I think that will trigger the pattern, and if that happens, I will not be surprised to see these markets. Let me show you also another sequence that can happen based on the most recent reactions here. So if we pushed our extension here, an extension of this very last swing high, then we have the pullback, a retest of the highs, a double bottom. And if I see the 127% Fibonacci, let's say 127, 141. So between these Fibonacci ratios, something between these ratios, that will print a bullish butterfly pattern. So that's one of the patterns that I like to trade. This is usually the market reacts inside this range. So I have already my range predefined before the market approaches these levels. So I can put a pending order if I need at 127% Fibonacci extension. I will target the 38% Fibonacci retracement level. So that suggests after the formation of the pattern a bounce towards the monthly fractal support, so the support level that we are now breaking. So if that bullish butterfly completes, we may see a retest of this fractal again, or this support again. So that makes some sense for me in terms of Fibonacci ratios and the default targets for that pattern. Okay. So I have already my reward, my potential reward for this setup. So if I want to, of course, ahead. Yeah, and I can use this amount of potential reward because I know if the market starts to react from here, the probability for the market to search for this 38% Fibonacci level will increase in my favor. So I can use those ratios or those, or in this case, the reward, and try to manage my limits. So I have a rule that says I never enter the market to lose more than what I expect to lose. So if I'm expecting to gain these amounts of moves if I'm expecting this move, I can create a 1-2 risk reward approach to try to trade this process.
Andre, do you ever help someone that has an interest in our community? That, gravitates towards your work and Harmonics, where you, in a way, kind of mentor them?
From our community, from ForexAnalytix? No, never. Never, and I think there's a reason for that, because with the content that we provided in our platform, even if I miss something, or even if Blake misses something, because I think which will be in edit, but if I miss something, we have probably the team will cover, even with a different methodology. All the team will cover that same perspective, or that same price level that you want to call your attention to, So, and for that particular reason, I believe people inside our community don't feel the need to ask for let's say for mentoring. Actually, we have a lot of experienced traders, and most of them much more experienced than myself. So that being said, I don't think it makes sense from our community. I have a lot of people asking for mentoring, which I'm not providing that kind of service at this point.
All right. Well, then
I had before.
We have a request for a gold chart. Why don't we wrap it up with gold?
Okay. This is a weekly chart for gold, and this is, of course, pure speculation. I don't know what will happen, but this is a symmetrical projection for gold on a weekly chart. The symmetrical projection will put the price trading the 200 moving average again. Wow. So this is just pure speculation. Again, I don't know what will happen. Let me remove this symmetrical projection from here, and let's talk about the ratios that we have here, because the ratios that we have here may help me to project patterns below. And the pattern that I'm projecting is the crab pattern extended at the golden fib. So this is 1528. This is a very deep fall for gold. Of course, if that happens, we may see the Dixie giving sequence to that
96.
Exactly, 96.16. So I will not be surprised to see that. Let's say silver is even, I think silver, it's even heavier than gold at this point, I think, unless it starts to find some.
Well, if gold's going to 1500, where would silver go to?
Silver's, I don't think 10. Let's say, well, 19. we have 19 probably. The golden, if that happens, the golden Fibonacci will be my main Fibonacci level. So previous structure resistance. That's we have also 19. We have the 200 moving average pointing to 1907. So that will not be something similar to that. We have also, if that happens, and of course I need to see the price approaching these levels. 127 again.
Yeah, sometimes it's not the price, it's how it gets there.
How it gets there, exactly. And I need to wait for that to happen. So there's a lot of options. One of them is a butterfly pattern, actually at that same price zone at 1958. So that's also a bullish butterfly pattern there, pointing to the 200 moving average. So I will not be surprised to see that. On a lower time frame, I prefer to stay a bit away from this process. We have these minor, I have projected this scrap pattern at right below the support at 21.35. If that happens, if the price decides to violate these structure supports, the weekly, I believe the market may sink a little bit. And if that happens, it may find it needs to find some support at some point. Eventually the golden Fibonacci of the last swing high. So this is a Fibonacci extension of the very last swing high projected below. So that's usually the market will find some pressure there. Not sure if it will be enough to produce the expected movement. So if that pattern forms below, we will expect something like a 38% Fibonacci again. So a retest of the supports if that happens. So, but this is kind of a minor event for gold if that happens.
Well, thank you, Andre. Live from Lisbon, Lisbon,
from Porto,
filled with wisdom, Andre Cardoso.
Yeah,
you know, if you,
Dale, I'm from Oporto. Lisbon are our rivals. Okay, don't.
Okay, all right.
I'm
anyway,
joking.
Live from Portugal.
From Oporto, we are from the north. They are from the south.
Then.
They are the district, the capital district. We are the second capital district in our country.
Okay.
The second most.
I'm sorry.
No problem. I'm joking.
In the
of course.
Wrong part of the country.
No, I have been working there. I actually enjoy very much Lisbon. It's a very, very nice city.
Well, people are saying they really enjoyed.
Oh, thank you very much.
We'll have to do this a little more frequently. Listen, guys, if you like Andre, and you're right, he is an artist with insights of technical situations in every instrument that he covers. So, if you want to see his work at the click of the mouse, take advantage of the promo that we have going for the next week or so.
Yeah, you have updates regularly, so you have constant advanced patterns being formed. So we just pay attention to those notifications, and if you have any doubts, any questions to ask, so please do that. You have my email address there, or I have a contact form for sure. So you have my Twitter also. So just contact me. I will have all the pleasure to give my 2 cents or to give my opinion.
And we learned a little history about there was actually a guy named Gartley in the 30s and before Carney.
Before Carney.
And then we have Andre Cardoso, A.C. after Carney.
After Carney.
A.C. All right. So I really love your work, Andre, and respect your work.
We are a very great team.
Yeah. So thanks so much for
Thank you.
Dropping in, stepping up, next man up.
No problem.
As a cancellation, and I'm glad we did because I learned some things. Every time you present, I learn from you.
Thank you very much. I learn every day. Yeah.
Okay.
It's a good process.
I've learned that you don't live in Lisbon.
I don't live in Lisbon.
All right.
For sure.
Thank you.
Thank
Andre.
you very much. Thank you all for being here.
Yeah, listen, everyone, have a great turnaround Tuesday. You could join the team in 12 minutes for Morning Edge. And if you want an edge 24 hours a day, you take advantage of the promo. And anytime, 2 in the morning, 11 at night, you can always go and check out and see what the guys are thinking about everything. So remember, don't just count your pips, count your blessings. We'll see you tomorrow. Adios. You're very welcome, Sinatra, Jatine, Monica, everyone. Yes. Adios. See you, Simon, Khalid. Good hunting. Love you too, Monica and Laura.